Supermicro Computer stock is now trading on a split-adjusted basis, which has a lot of investors asking if they should buy Supermicro Computer stock now after the split. Of course, the stock price is facing headwinds. It's lost nearly two-thirds of its value following recent developments, according to a short seller, and then the company delaying its financial statement release, and so all of which that's brought down Supermicro Computer's stock price. Of course, in March, I told investors, hey, it's a great time to take profits in Supermicro Computer stock. I rated the stock as a buy in January, and then after the huge stock price increase, I told investors to take profits in March. So what will I say in this video? Will I highlight and upgrade the stock back to a buy? Stay tuned to find out. Let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So, as I highlighted at the introduction of the video, Supermicro Computer stock now trading on a split-adjusted basis, $40.77 per share. Of course, that's down on a split-adjusted basis from the roughly $120 per share it was trading at near its peak around March. Of course, I told investors in this video here, roughly 6 months ago on March 6th, that it was a great time to take your profits and sell Supermicro Computer stock. The reason I highlighted was the extremely stretched valuation here. It was trading at a forward price to earnings close to 38, when in the last 5 years, it had never sold at a forward price to earnings above 15. So I highlighted that as the primary reason to take profits and sell Supermicro Computer stock. Of course, this was right around the time the company was joining the S&P 500 index, and the stock price jumped 25% on that news. And I highlighted that these types of events are no reason to own a stock. They don't have any implication for the company's revenue, its profits, or its cash flow. Those are the primary factors I consider when evaluating an investment. And that's going to foreshadow what I'm going to discuss in this video here. Following the stock split, is the stock split a reason to buy Supermicro Computer stock? And again, just like I said in this video, that's no reason to own a stock. So I've been talking about that for some time now, and again, I show evidence of why this isn't a good reason to buy a stock. This video here where I highlighted S&P 500 inclusion is no reason to own a stock. The stock price has collapsed since the company joined the S&P 500 index. So it's no reason, it's no indicator of a success. Similarly, when NVIDIA split its stock, I said it's no reason to own NVIDIA stock just because it did a stock split. And NVIDIA's stock price has been flat to down since it did its stock split. Now, I did say that NVIDIA stock is a buy, but not because of the stock split, just because it is an excellent investment based on revenue, profit, and cash flow. So, given those are the factors I look at, let's evaluate Supermicro Computer stock based on those fundamental factors, based on revenue, on profits, on cash flow, and valuation, to determine if we should own Supermicro Computer stock. Not because it did a stock split or not because it joined the S&P 500 index. Those are outside factors that I feel are irrelevant on my decision on whether or not to own an investment. Those events could create short-term increases or decreases, but they don't have any implications for long-term shareholder value. Just because the company's in the S&P 500 index doesn't mean its revenue is going to improve, doesn't mean its profits are going to improve. And so I don't look at those as primary factors for decision making. Revenue, however, is soaring for Supermicro Computer. $15 billion in the most recent trailing 12-month period. That's up from less than $4 billion in 2021. And so the company's experiencing booming sales as a result of the rising effectiveness of AI. Supermicro Computer works with NVIDIA, offering liquid cooling solutions for these data centers that are optimized for AI. And hyperscalers like Microsoft, Amazon, Google Cloud are spending tens of billions of dollars building new AI data centers optimized for AI. And they need to continue doing that because the return on investment is so in favor of making those decisions that they will continue making those investments until they exhaust all of those high return on investment opportunities, which doesn't look like it's going to end anytime soon. And that's great news for Supermicro Computer. Now, one of the big risks of Supermicro Computer is that with its growing sales, its cash flow from operations has turned negative. It was never great to begin with. It never had a cash flow from operations well above double digits. Briefly, it hit 10%, but it's not a very profitable company to begin with. The business model is not very lucrative. And then when you're experiencing rapid growth like Supermicro Computer, and you're selling hardware, you're dealing with hardware, it makes it difficult to continue growing at that magnitude because you have to spend money on the materials, on the inventory first before you sell the inventory, install the inventory, and then have your customers pay you back. So this isn't like Supermicro Computer makes a sale and it gets the money immediately. When you're dealing with business-to-business sales, which is what Supermicro Computer does, you build up your inventory, you install the product, and then you get paid maybe 30 days later, maybe 60 days later, maybe 90 days later, maybe 120 days later, depending on the terms you negotiate with your customers. And given that Supermicro Computer is dealing with powerful customers, right? Like I mentioned earlier, Alphabet, Microsoft, Amazon, these are big, powerful companies that exercise their negotiating power. They exercise it. They don't waste it. They say, look, if you want to capture this sale from us, that's going to be large. You need to give us these terms at these prices and let us pay you back at this time. And Supermicro Computer has to say yes or no. It doesn't have very much negotiating power against those companies, especially because Supermicro Computer's competitors will be quick to jump in if they balk at any of those opportunities. And so that's why you've seen its profitability and its cash flow from operations not doing very well, despite the fact that sales are soaring. Now, its operating profit margin is trending downward, 8.5% in the most recent trailing 12-month period. It briefly touched over 10%, and now it's heading back down. Supermicro Computer management has said that it's offering attractive terms to gain market share. So it's not focusing on increasing profit margin, it's focusing on increasing market share. And that's weighing down its profit margin and the return on invested capital, which soared initially in 2023 following those increases in sales, but has since trended downward to 27%, down from around 32%. And given the factors I highlighted earlier, I wouldn't be surprised if sales continue trending downward. Now, all of these metrics I highlighted could change because Supermicro Computer has delayed filing its financial statements. Management said that they don't think they're going to change any of their financial statements that they previously gave investors, but there's still a chance that they go back and they update because they're under attack from a short seller and investors are putting the microscope on the company to be more transparent, to reveal more about its business because they are growing skeptical. When you have a company with booming sales like this and declining cash flow from operations, even though it happens, it's common for a hardware business to have negative cash flow from operations when sales are soaring, it still brings a microscope because that's potential for misrepresentation, for misreporting when you have sales soaring and cash flow falling. So there is heightened risk for Supermicro Computer in the near term because there is a lot of uncertainty with its financial statements. Supermicro Computer management can help alleviate a lot of those concerns by working to release its financial statements and address these concerns. The longer this drags out, the more investors will grow skeptical. Now, Supermicro Computer is trading at a more reasonable valuation. Remember in my video when I recommended investors to sell and take profits? That's when its forward price to earnings was at 38. Now, forward price to earnings is a valuation metric. This shows you what you're getting in return for the price you're paying. It's more important than the market price. The market price just tells you a price, right? Is it good, bad, cheap? You don't know until you know what you're getting in return. If I told you I'll sell you a car for $500, you might initially think it's cheap, but then when you come see the kind of car I'm going to give you for $500, you're going to say, wait a minute, I'd rather keep my dollars and not buy that car for $500. It's not even operational. It barely has any doors. It barely has anything on it. That's why it's important to look at valuation. What are you getting in return for the price you're paying? Doesn't really matter what the market price is. What matters more is what you're getting in return. So investors were buying Supermicro computer stock at this elevated valuation when I told them that's too expensive. And now that valuation is down back to its historical levels here, back closer to its historical levels at a forward price to earnings of 9.3. So remember, I had investors sell Supermicro computer stock. I had it rated as a hold, not a buy. And if Supermicro computer didn't have that financial statement delay hanging over it right now, I would have rated the stock as a buy. But simply because of the uncertainty around the financial statements, I'm keeping the stock rated as a hold here. So if you ask me, is Supermicro computer stock a buy right now? I would say no. I would say investors would be more better served if they were to wait for the company to release its financial statements, make sure they're not decreasing or changing any of the previous statements, and then you can feel comfortable buying the stock at this current valuation. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.